Hello, welcome to the European Open briefing for Friday, February the 10th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we're seeing a bit of a rebound in the US dollar. We had some comments by US President Trump yesterday where he signaled that he will make an announcement on tax reforms within weeks, and this the markets interpreted this as the proposed or the pledged tax cuts from the election campaign will be announced very shortly. So this had a big impact on the US dollar as well as on US stocks, and it had overall a positive effect also on risk sentiment globally as well. Adding to that risk sentiment, to the positive risk sentiment, were trade data out of China this morning. The latest figures suggest the exports from China jumped by 7.9% in January, so that also had a very positive effect as well. The Australian dollar was boosted by those Chinese figures, but also we had the RBA's latest quarterly monetary policy statement on the Australian economy, where they signaled that inflation has stabilized, which lowered the odds of another rate cut by the RBA anytime soon. In Europe, though, the euro is still under pressure by those ongoing political uncertainty regarding the elections coming up across Europe, mainly France, which is in April, and of course the renewed concerns about the Greek debt crisis. So let's start with the dollar-yen pair. We can see that big jump yesterday after those reports came out where Donald Trump allegedly said he will make an announcement on tax within weeks, and the dollar is currently 0.5% higher against the yen at 113.75. US equities also got a big boost. All three main indices, the Dow Jones, the S&P 500 and the Nasdaq Composite, closed at record highs yesterday. Coming up today, we've got that meeting between Trump and the Japanese Prime Minister. It's going to be a two-day summit. They will likely discuss trade, defense cooperation, as well as macroeconomic issues, mainly currency policies. So the markets will be closely watching that for signs that the US and Japan will continue their strong ties rather than lead to any drastic changes in terms of trade policy between the two nations, which would be very negative for the dollar. But also in the markets news today, the Bank of Japan was again intervening in the bond markets, so that lowered the yield on Japanese government bonds. In contrast, though, US Treasuries moved higher today, mainly on those hopes of tax cuts in the US. So let's move on to the Chinese data now. We can see it in the table here. Exports were up 7.9% annually in January. Expectations were for a much smaller figure of 3.3%. Imports were also very strong. They surged by 16.7%. So the exports rate growth is the highest in 2 years, while the imports is the highest since April 2013. So all of this is an indication that Chinese economy is improving with both domestic and global demand strengthening. We've got a very strong construction sector currently in Japan, so the boom in that sector is boosting demand for metal imports such as iron ore and copper, and that in return is boosting the Australian dollar, which is a close trading partner. Also, with the trade surplus with the US narrowed a little bit, so that helped ease concerns that trade tensions between the US and China would escalate, because if the data suggested that China's trade surplus with the US is growing, obviously that would have put more pressure on the Chinese government to do something to counter that, or it would give Donald Trump a bigger reason to impose tariffs on Chinese imports. In terms of the Chinese yuan, it was a little bit weaker today at around 6.88 per dollar at the European Open. Let's move on to the Australian dollar now. Although over the past 3 days it's been pretty much range bound, it is up though from yesterday's close, mainly on that China data, but also on the RBA's monetary policy statement, where the RBA said that inflation has started to stabilize. So that indicates that the RBA is unlikely to cut rates again, although at the same time it does mean that the RBA will likely keep rates lower for much longer than previously expected, as the underlying inflation is not likely to hit the RBA's target band of 2 to 3% until 2019, according to today's forecasts. If we move on to the euro now, we can see the euro has been weakening since midday yesterday. It's mainly to do with the dollar strength, but also on the ongoing uncertainty with the French elections. The far-right leader, Marine Le Pen, is currently ahead in the opinion polls. The former favorite, the Conservative leader, has suffered in the polls because of that financial crisis regarding payments to family members. And of course, given what's happened with Trump winning the US election and Brexit, of course, markets are being very wary in terms of what could happen in France. And they're not discounting the fact that Marine Le Pen could win perhaps the election in April. Also, we've got fresh doubts about Greece's bailout program, because there is a stalemate between the Eurozone and the IMF over how to proceed with the bailout review. The IMF is arguing that the Greek debt is unsustainable, the Eurozone disagrees, and all of this has sent the 2-year yields on Greek government bonds to a 7.5 months high, and that's weighing down on the euro. Let's move on to today's economic calendar. Apart from the Chinese data, we had corporate goods prices in Japan, which came in slightly better than expected. We had French industrial output data, which was worse than expected in December. Later today, we've got UK industrial and manufacturing output. Those will be closely watched, but it will be quite a US session. We do have Canadian employment data though, and that will likely have some impact on the Canadian dollar. In terms of the US data, the main one to watch out for is the University of Michigan Consumer Sentiment Confidence Index. Thank you very much for watching and have a great day.